Hello and welcome back to the Startup Operator podcast. This is Roundup number 104. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we bring you the biggest headlines from India's growing startup ecosystem. Now, it has actually been a while that we have spoken about Edtechs in this podcast, right? And last week, all of a sudden, this ecosystem sprung into a lot of action. Unacademy is right now in talks for a potential merger with Akash, which was acquired by Byjus in 2021. Now, if this deal happens, it will be merged with Akash. With this, Akash's valuation will increase to $3 to $4 billion, and their revenue right now currently stands to around rupees 1,400 crore, right? And this $3 billion valuation is giving the company a 10x revenue multiple.
So, depending on what article you read, it either suggests that Unacademy is looking to merge with Akash or that Akash is looking to merge with Unacademy. Again, go by whatever you think is your favorite one, most reliable one. Akash is a money-making entity, right? It's churning out a ton of cash. They're going to end FY23, I think, with 2,500 crores. And that is why 10x multiple on the valuation also. So it's kind of interesting, right? Edtech, there's a period of consolidation now, right? Obviously, all of these folks raised a ton of money in 21-22, a bunch of acquisitions. Some have worked, some have not worked. And all of them have laid off a bunch of people. They've had to tighten their purse strings. So it'll be interesting to see who sort of blinks first, in this whole Byjus and Unacademy sort of a showdown. Of course, Byjus was last valued at about 10 or $12 billion. And then has been looking to raise some fresh money as well because they have a bit of a liquidity crisis. They also have this whole due diligence thing that got delayed and stuff. Meanwhile, Unacademy also, while Gaurav Munjal has said that, they always raise more money than they need, they've also been holding tight, right, at this point of time. So it'll be interesting if both of these merge. Unacademy, of course, is strong on the digital front. They've opened these Unacademy experience centers. I'm not sure if, how much traction they're getting on that front. But Akash is the legacy player in this, right? Akash got acquired for $1 billion and the deal, there were some complications, whatever. But that, they have been in this business for ages. So we'll have to wait and watch, I suppose,
So thinking about it, right, you mentioned that this is a time for consolidation within the edtech space, right? And if you look investors in both Byjus and Unacademy, it's Tiger Global, Sequoia Capital, General Atlantic. Do you think from an investor standpoint, it makes sense to merge your companies to fight off like rivals like Physicswallah, which is India's only profitable edtech company today?
From an investor perspective, yes, it will make sense for companies to consolidate, right? That means lesser competition, and that means they get to hedge a little bit on both of these companies as well, right? Yes, investors do push for consolidation in hard times.
Okay. Also, talking about Physicswallah, as mentioned, this is India's only profitable edtech startup. And a couple of weeks back, they had also acquired UAE-based company called Knowledge Planet, which was marking their entrance in the global markets, right? Going after the markets like which Byjus are already there. Now, reportedly, Physicswallah is in preliminary negotiations to raise at least $250 million from new and existing investors. And I think they really weathered the whole mass layoffs, whole funding winter, all of these things really well. And currently, they are in the market raising fresh funds, not because it requires it, but I think it's for them also to increase their valuation and explore merger and acquisition.
Yeah, see, there is the saying that, you don't have to be the first in the market to really win. Google wasn't the first search engine, Facebook wasn't the first social media company, and so on, so forth, right? And Physicswallah, although a late entrant in the scene, seems to have played their cards right. And Alak Pandey's is a very, very inspirational story. Comes from a middle-class family in UP. Apparently, father got laid off from his job when he was in his third or fourth standard, got really serious about studies, couldn't afford to go to IIT coaching and all of that. So he did engineering in a UP college, dropped out of that college, and instead chose to teach students, right? And he became that epic, legendary Physicswallah, as they call him. And if you look at all of his acquisition, it's pretty organic. He had his YouTube channel, which was widely popular. His content is really good. right? So he never really had to pay so much to acquire these customers, and if you look at how the CAC or the customer acquisition costs have just continuously ramped up over the last couple of years. Of course, there was a lot of money to spend. Physicswallah doesn't have any of those classic problems that some of the other legacy players have, right? So yeah, I mean, more money at this point of time could help them expand, could help them invest in new products and a bunch of other services as well. So yeah, wish them well.
Well, yeah, and also it's like great to see EdTech again coming to the foray. While there is a lot of debate as to what the future of this industry would be, but it's good to see some
See,
action.
it's a genie out of the bottle situation, right? EdTech, as I've often said, I mean, I think it's about 2% of the total education market in India still, even after all of this action. This whole process of creative destruction will take its own form, right? And whoever's left standing after that will definitely, have the riches to reap for sure.
So there was this line which I saw from the World Economic Forum, right? Which talking about EdTech, it says, after a decade of glittering promises of democratization and egalitarian education, EdTech and its companies have become bigger, but not necessarily more educational.
I kind of disagree with that. I think if you look at any of the edtech companies globally, also whether it's Khan Academy or whatever, they have done far more to sort of democratize education and also go deeper beyond just the superficial, right? I mean, in all fairness, today, I mean, we have 3 or 4 levels of depth to every subject that you take, maybe more. Compared to what knowledge was about 3 or 4 decades back, right? And those times, I mean, it was majorly dependent on the school or the teacher that you got, right? I mean, whereas today, I mean, I can access the best professors and the best teaching material from across the world. So as usual, you have to take whatever the WEF says with a pinch of salt and maybe a little bit of tequila.